Hi, this is Nick Hodge, editor of Wall Street's Underground Profits. I'm here on the sidelines of the International Metals Writers Conference in the Cole Harbor Room at the Pan Pacific in Vancouver. I'm sitting here with Stephen Dean. He's the chairman, CEO, and director of Atlantic Gold, which is the only fully financed, permitted, and under construction gold project owned by a junior in Canada. And we were just going to have a little chat here about the gold markets and what's been going on, particularly as it relates to the acquisition of junior gold companies in Canada. Stephen, what's the trend been? We've seen just in the past couple of weeks or so, Eldorado take out Integra, and before that we've seen Kaminak taken out in the Yukon. Why is the trend towards buying out Canadian juniors? What's the rationale behind the majors there?
Well, as you know, Nick, I've been in this business for almost 30 years, and so part of it is just where we are in the cycle of the sector. But the other part of it is it's getting more and more difficult to find and own production in the safer places, jurisdiction-wise, around the world. And so as a result, there's been a fair amount of focus of activity on companies with projects in mining-friendly jurisdictions, mining tradition countries like Canada and North America generally, but particularly Canada. And a lot of companies want to rebalance their jurisdictional risk, the bigger ones at least, by bolting on local production in Canada. So the Eldorados, the Gold Corp acquisitions in recent times, I think are partly driven by that.
The project itself already checks a lot of boxes, but there's more potential there. You guys already have a 2.1 million ounce global resource, and you're working towards, as I understand it, a new resource estimate. And there's potential for more discoveries. I think in the latest slide deck, if I'm not mistaken, I noticed one of the slides said you think there's potential for another deposit discovery at the Moose River project. Can you talk a little bit about, in addition to being headed to production in September, the upside, the exploration potential at Moose River?
The project, as we know, as we call it, Moose River Consolidated, is really a consolidation of 4 different deposits that are all within trucking distance of the central milling facility that we're presently constructing at the moment at Moose River. The approach we're taking on the exploration front is twofold. One, there are 2 deposits which we call Cochrane Hill and 15 Mile Stream, which were not in the base case feasibility study, but they were in indicated and inferred resource categories, which means that what we needed to do was do some more drilling to increase the density of that data, which will allow us to then categorize those resources as measured. As soon as we've done that, that then allows us to incorporate those deposits, that's just over 1.1 million ounces actually, as an additional production source for our base case project.
Just to put an umbrella on it, you have the Moose River Consolidated project, there's the Tokoi deposit, there's the 15 Mile Stream deposit, there's Cochrane Hill. And I think a good analogy is a string of pearls. Now, you were also involved in the Macraes project of OceanaGold in New Zealand, and that's similar to what we have here. If we take each of your deposits as a pearl, can you talk about the string of pearls analogy and how it relates to your experience with the Macraes deposit?
Yeah, in fact, now that's a great question, because that was what got us most excited about what we saw at Moose River. You're quite right, I was involved in the very early days during construction and financing, and involved later when we created OceanaGold as a spin out of a predecessor company in the early 2000s. And the Macraes deposit in New Zealand is set, like our deposits, in sedimentary rocks, structurally controlled. And when the Macraes project kicked off in the mid to late 80s, they had around 600,000 ounces of resources, I think 400,000 or 500,000 ounces in reserves in a single pit. 31 years later, that project is still operating. I think it's produced almost in the order of 4 million ounces and still a number of ounces to go at low costs from 10 separate deposits, which are now 10 open pits. I see the same potential here at Moose River.
Well, I think that hits at the heart of the matter and the heart of the opportunity for an investor as it relates to Atlantic Gold. You have this base case that all your economics are put forth on, but there's also this significant upside potential and the potential to extend the mine life beyond the current base case. And I think that's the reality that investors are waking up to, right? The stock has doubled so far this year in 2017, and it's tripled in the last 2 years. And so I think investors are starting to wake up to this opportunity, and yet at the same time, there's still much ahead for Atlantic Gold. As you mentioned, you have the grade control drilling ongoing. You have commissioning expected in September. Can you talk maybe a little bit about what the next 6 to 12 months looks like for Atlantic Gold?
We're expecting at the end of June or the first week in July, somewhere around middle of the year, to be able to release a new resource statement for Cochrane Hill and for 15 Mile Stream, the other two deposits that are not presently in our life of mine plan. The next catalyst will be commencement of commissioning.
Always an exciting time.
It is. In July, we will be undertaking what's called dry commissioning, meaning turning motors and the plant over. In August, wet commissioning, and then in September 1st, ore to the mill. And that's a critical turning point for us, and that will mark the transition from explorer/developer to producer and cash flow generator. And I'm sure from your experience, you would agree that that's typically a big valuation catalyst for most companies. And then also in September, the same month, we expect to be able to release a new life of mine plan, which will reflect the additional ounces that we see potentially from Cochrane and from 15 Mile.
Stephen, one thing that sticks out in my mind regarding Atlantic Gold is how quickly you were able to consolidate the project, bring it under sole ownership, and then get it under construction. Can you talk about the time frame that it's taken you and how that relates to others that have done it?
Yeah, I think that's one of the things that I'm particularly proud of in terms of our management team is that we consolidated the 4 deposits, which is our current resource base, under our ownership in the space of about 18 months, including getting in that same time frame permitting finished off for the Tukoi development, fixed price EPC contract for the construction negotiated, and debt financing as well as some equity financing, all within, as I said, about 18 months. And then a 15-month construction schedule with Ausenco, which will allow us to come in on time and on budget in September. Those timeframes, I think, are very short in the industry. Time is money. The longer you delay putting a project into production and generating cash flow, the more you diminish your returns ultimately on the project, because you're having to meet carrying costs and property holding costs and overheads and what have you. We as an industry don't always talk about those, but they do have an impact, and so our objective is to compact those timeframes so you can get into production and cash flow as soon as possible.
Yeah, that's definitely one of the things I looked at when I was, deciding whether or not to cover the story and recommend it. And time is money, as you say, and you guys have done very well executing on that front. So, we're going to be headed into production in just a couple of months here, and the base case says that it's going to be 90,000 ounces a year of production from the deposits you currently have. But, with the drilling you've done and with the new resource you're going to come out with, we're looking to potentially double or triple that. Can you talk about the life of mine and the annual ounces produced and how that's going to grow and extend?
Sure. Well, I don't know what we're going to be able to achieve yet. That's going to be dependent upon where the resource estimates come out in the next month or two and where our engineering comes out. But our objective, our target, is to put in place a life of mine plan where we're producing of the order of 150 to 250,000 ounces a year for an 8 to 10 year mine life as a target. And if we're successful with that, then the project and our business will be worth substantially more than it is today.
Well, and I think that's probably one of the things institutions looked at when they were deciding whether to invest and take a stake in Atlantic Gold, as Sprott and Raikul have done. I believe they own 10% of the company. Can you talk about your relationship with Rick and why they decided to invest in Atlantic Gold?
Rick's involvement actually goes back to the very genesis of what is Atlantic Gold, in that he and I sat down and said, with the $30 million of cash that we managed to put together in the company, let's go back into the sector, and when the sector was down and out and we're at the bottom of the cycle, we were looking for opportunities like this to pursue and apply our skills to develop and take these projects through to development. And so Rick's been involved since the very beginning, and he's been a great supporter to us over the years in getting to where we are today. And as you say, he's still a substantial holder of around 10%.
Well, I have to imagine he looks for undervalued companies if the point of resource investing, and all investing in fact, is to buy low and sell high. And on one important metric that we look at in the resource space is, multiples of cash flow once the mine comes into production. And by that metric, you're currently being valued at the low end of the spectrum. And so, as an analyst, as an investor myself, when I see a company that has, assets like yours, production profile like yours, and is being only valued at the low end of the spectrum relative to its peers, to me that screams undervalued. Can you explain how those multiple valuations work and where you stand in relation to your peers currently?
Sure. Those multiples are a function of what the industry calls consensus estimates of by brokers and research analysts that cover the company. And I think right now that has us at around 3 or 3.2 or thereabouts, with a peer group average of producer peers. We're not producing yet, but we're pretty close. At a number closer to 6. So that would suggest that there is room for re-rating of the valuation of our business and our share price. On top of that, as we've touched on, we also have this expansion scenario, which could even reduce that current valuation even lower, which means that we've got an even bigger potential valuation catch-up in the near future, particularly after we announce our revised life of mine plan incorporating Cochrane and 15 Mile into our production profile. So those two things are definitely drivers. I tend to approach it a little more simply, in that it doesn't matter whether you're in the gold business or the table manufacturing business. Businesses buy and sell on multiples of those cash flows. We're currently valued around $250, $260 million Canadian in the market, and we're destined to generate an operating cash flow based on our production profile of around 90,000 ounces, with a cash cost in Canadian dollars of just under $700 and a Canadian dollar gold price of about $1,700, means that we've got a operating cash flow, including sustaining capex, per ounce of about $1,000 per ounce. So quick math is 90,000 ounces at $1,000 an ounce is at around $90 million in cash flow. So go back to that market cap value today of around 250, 260. That means that we're trading at less than 3 times our operating cash flow. And that's easy math for any investor to do. As I said, it doesn't matter whether you're in the gold business or any other business. That's good value, in my opinion.
Well, Stephen, it's a fantastic project. It's a fantastic management team. There's some really strong economics, as we've discussed. There's the potential for a stock re-rating as you head into production. We didn't even talk about what happens if the price of gold goes to $1,350 or $1,500 gold, because we don't need to. The project is so economic and robust at today's prices. And I think that's why investors are getting excited about it. I'm proud to cover the story as the editor of Wall Street's Underground Profits, and I look forward to seeing the project head into commissioning and production. And I encourage investors to check out the story, and especially before the first gold starts being poured in Nova Scotia. So, Stephen, thanks a lot for taking a few minutes to chat with me about the project today.
Thanks, Nick.
Appreciate it. Thanks for watching my interview with Stephen Dean, Chairman, CEO, and Director of Atlantic Gold. I just wanted to mention quickly that in addition to everything we talked about with Atlantic Gold, we didn't even have to mention the gold price, because Atlantic has such robust economics at today's current gold price of $1,260 US, or around $1,700 Canadian. And if we talk about catalysts for a potential rising gold price, you have record high debt levels around the world. You have global stock market indices at record highs. You have negative real interest rates. You have mounting geopolitical tensions. You have an unprecedented presidential situation in the US, and all of these underlying factors are things that can potentially drive up the gold price over the medium to long term. And I think that Atlantic's current economic situation lends itself highly to being leveraged to the price of gold. If it's economic at today's gold price, it's going to be driven up many multiples higher than its current market cap valuation, as gold potentially rises to $1,300, $1,400, or $1,500 gold, as many analysts are calling for. So I would encourage you to check out the project. You can learn more about it by going to www.atlanticgoldcorp.com, and you can always learn more about my publications at www.outsiderclub.com.